Okay, welcome to the Swing Trading with Cycles channel. This is where we time the markets without predicting the markets. We're going to look at precious metals today. It's October 15th, Saturday night. It's been a very eventful week. We had the CPI print on Thursday, and that turned out to be, in real time, small time frame, a really massive bull trap for many asset classes. Or excuse me, I should say a bear trap, excuse me. Massive flush lower and a rally higher, but then Friday just a big pullback. So we'll look at gold. We'll start with the daily chart. Again, general sentiment not great. So we had this rally for 5 days, which is like pretty violent, right? Like, wow, look at that. 1, 2, 3, 4, 5, right? 5 green days. I mean, this was obviously really tough to stay long. But in the process, right, this day became a swing high once we crossed below the low, because this day was the high. Once we crossed below that low of 1695, and I tweeted about this. If you're not following on Twitter, definitely take a look at the link in the description. But once we broke below that low, now we find ourselves, we closed at 1643, right? So that's more than $50, 50 points. This was a consolidation the next day. This also a consolidation, and we consolidated a little bit on this day, then we broke down, came back here, made a higher low, then broke down some more. This was consolidation, then we broke down. What do we think is going to happen from here, right? Probably some more consolidation and then more of a breakdown. That's what the most likely path. So this is day 13 of the daily cycle, topped out on day 5. Cycles that topped out on day 5 are not very bullish, right? You can even look at it's kind of funny. Like, I think Gold Ventures, he tweets about gold a lot, right? Like, we're precious metals in general. I'm more of a silver guy, I think. But like, he talked about day 5 of a new cycle, which I think may have been exactly here, like Pico top. Not to say that we can't do like some kind of violent reversal kind of thing where like, okay, this is like that, and we did that, and then we're gonna go like that, right? Maybe, but like, what are the odds, right? Like that and then that? Probably not, right? Probably something like this and then that, like that, right? At worst, like most positive scenario, right? Like, again, this was consolidation for 3 days and then a dump. So you can imagine there's going to be some more consolidation and then another dump. So that's your daily. If you look at your weekly, your yellow line is your 200-week moving average. That's starting to come into play for all asset classes. If you take a look at the rest of the videos on this channel, because I talk about all the asset classes. Really, uranium is one of the few that's staying well above its 200-week moving average. But all the major indices, plus all the precious metals, are either testing their 200-week moving averages or below them. So again, this is your weekly. And so the weekly cycle count is murky at this point. Like, this would seem like a weekly cycle, like a new weekly cycle closed above the 10-week moving average, and now we failed, right? And this is week 10. And so this would seem like it's going to make a new low below here. So that would potentially make this week that just ended, right? The week that's ending now, week 12, right? And this week that's about to start on the 17th, week 13, we'll see how that actually plays out. And we can see this 10-week moving average is riding it very, very, like, sort of hugging it in a way. And again, in terms of the 10-week to 200-week moving average, this would be another week where we're closing below it. So we closed below it this week, we closed below it that week, then we closed above it, and like, okay, we're good now. Now we've closed below it again. That's not surprising. Like, you're going to oscillate above and below it. That's interesting. And I will just call out here really quickly that, the moving average itself is meaningless. It's really just a signal for something else. And really, it's the trend analysis that you want to focus on. And so this is your monthly chart. My God. 1, 2, 3, 4, 5, 6, 7 red months. It's only the middle of October. And so we need to get back above the opening price, which was 1660. That would get the month back to green. So it's possible that we can avoid having this month go red as well. But even if it doesn't go red, we had our lower high. And I keep saying this. It's important to understand that. That's how price moves in a trend. Lower lows, if it's moving lower, it's lower lows and lower highs. Those lower highs are important. This was probably one of those lower highs, right? Like this was a lower high. That was a lower high. When you see these upper wicks, those are lower highs. That's price rejection on that lower time frame. And in this case, this teal line, again, these are just moving averages I've added to the charts as we're in these long-term downtrends. It helps to just visually see it more easily, right? We're at risk of closing below the 50-month moving average. That's really important to know about. Let's see where we close in October, right? We closed below that in 2018. In like the depths of the bear in 2013, 2014, 2015, we lived below the 50-month moving average, right? In that bull period before that, we rode above it so comfortably. It was crazy, right? And so now you want to ask yourself, are we going to fall below it? It would certainly seem like it. Most importantly, it is still the 8-year cycle decline. Again, that's what these numbers are. This last 8-year cycle low was at month 86, and then we rallied for 56 months. It certainly wasn't in a straight line. This was a lot of consolidation and ugliness, but then we finally got to move higher into a parabolic top on August 2020. We then consolidated for basically 2 years, and then we had a war-fueled run as the Ukraine war happened. Did not make a higher high, missed it by $5. And ever since, we've been just drooping lower. We are moving into that 8-year cycle low. And now it's a question of when do we get the low and at what price does that happen? It would seem like we're setting up for 1450, right? And that doesn't certainly have to happen in a straight line. In fact, I don't think it could. I think we're going to have to get a rally before, if that were going to happen, right? Like something like that, right? Right? Like it's not going to happen like just droop down from here to 1450. That seems unlikely. I mean, it could, some kind of flash situation, but more likely you get a ratchet lower. So that's your gold move. And let's look at silver now. We'll go through this quicker. So this is your monthly chart, and I tweeted about this. This was a really bullish monthly looking candle, green. Now it's red with a big upper wick, threatening to make new lows. Looks like it will make new lows below 1756. And this is silver CFDs. Now this is important, and this because we are like obviously because so I should not obviously. This is day 31. Silver is on a different count than gold. We're getting close to what's possibly a daily cycle low, right? And so we may get a bounce coming soon, and so we want to be aware of that. But important price action to note, we consolidated here, this little bull flag thing inside the range of this big candle, right? Then we had a breakdown. I was like, uh-oh. Are we going to make new lows? No. Oh, my God. This is a false breakout, right? Excuse me, a false breakdown. It looked like we were going to break down, and then we got violent reaction, right? Now we're breaking down again. So it's like, this is a false breakdown, and this is potentially a false breakout. So it's like, which is true? Is this false breakdown true? Or is this false breakout true? Which means if this is true, then it's bearish. We're going to make lower lows. If this is true, this is going to eventually stop. This is certainly setting up the character that this is the true thing, right? Like we did all this consolidation. We had this, like the idea that this is just giving back this whole move has given back this whole move of gains. That's always a really ugly sign, a really bad sign. So day 31, which means, again, we could get a daily cycle low really soon, so we could get a really violent bounce. If we look at the weekly chart, we've talked about the 200-week moving average. Do you notice silver has been living under that basically since July, right? We came back up, tested it, knocked our head on it, came down, tested it again. This is a potential double top. This is, and this Probably the most generous weekly cycle count you could give silver. We just topped out on week 5, right? This would have been a top out on week 3, right? So, well, no, 1, 2, 3, 4. Yeah, that would be about week 5 as well. So it's like silver can't rally for more than like 4 or 5 weeks. That's a really bad sign. And we did make a higher high above here, to be clear, right? So, I mean, one could hold out hope in that sense, I suppose. But like, this is not a good look, right? Like, again, and if you look at it from that perspective, poking above this line and then failing and then this huge downside, this just makes that false breakout even more evident. And notice that happens right above the 200-week moving average. All not good signs. And the daily chart, we talked about that daily cycle low happening. I do want to call out, if you look at that weekly chart, or excuse me, the annual chart, right, where you're looking at every candle is a full year of price action. I mean, my God, look at this. Right, we made a slight higher high this year, ever so slight, like less than $1, and then we just failed. Look how far below last year's low we are. We are threatening to fall below, like to test this COVID low at 1163, and that's not even anywhere near the bottom end of the range. If you look at the structure of this chart, $8 actually looks like more of a magnet, if anything else. So it's just going to be really interesting to watch this. And finally, we'll go with GDX. So this is your annual chart for GDX. We'll just stick to here. Notice how far below the last year's low this thing is as well. My God, that's ugly, right? Like, so last year's low was $28.83, and we're down here at $22.72. That's important to know about. Now, but this has really important levels on the daily. So we have our high on day 6. It's a double top from here. We did make a slight higher high, so similar to gold in that case. But our CPI day, we gapped down because the number comes out at 8:30, and this thing doesn't trade all day. And then we've rallied back up, but then the next day we opened here, and then we kind of just had a big red day. Very, very close to the lows, to be fair. And so this is your daily chart again. So we're going to watch. Monday is going to be really important. What happens within the range of 2386 and 2247? Do we break above it? Do we break below it? Or do we stay within it and just kind of grind, right? That's your daily candle. And if we look at our weekly, again, that yellow line is your 200-week moving average. In this case, you can see we sliced below the 200-week moving average in June and really didn't even look back. Like, this tiny little rally got nowhere near that. And then we failed again. Tiny little rally, nowhere near that. Failed again. This one teased us, got above here. So it made a slight higher high. This was green at one point, a green bullish looking candle. And this is labeled as 1 because it's potentially the first week of a weekly cycle, assuming this was your weekly cycle low. And I think this is also just an important concept where sometimes things are so bearish that they don't follow the general conventions where it's like, oh, right, the first cycle can't fail and all that kind of stuff. Sometimes the first cycle can fail if it's like really bearish. And this like this rectangle here is just representing potential clear air, right, where we could see price just drop rapidly. And so we're going to want to watch to see if we do break back below into that area. So that's GDX. That's the precious metals in general.